So, Lisa, what are you telling your clients right now with the NASDAQ almost about to go to the flat line for 2020, given all of the risks and the economic headwinds we face right now? What should they be doing?
Our strategy has been to, move away from the indexes, which we think are excessively concentrated in super expensive, tech names that we all know. And really, if they want to play the market here, to go after pockets of value and areas that were still left behind from, the February-March sell-off. So that would include areas like financials, like industrials, like small caps, like materials, like energy. And those are the areas that we're encouraging folks to be stock pickers, not ETF index buyers.
But a lot of those areas are, Lisa, the areas that have underperformed. I mean, it's really been growth over value in this comeback highlighted by the NASDAQ. So what turns the tide?
Look, I think the cycle will turn the tide. Ultimately, the value names had their performance exacerbated by the sudden stop recession. As the economy reopens, from our perspective, that's where your operating leverage to improvement is the greatest, and that's where it's not fully priced. If you look at the NASDAQ, you look at the top names in that index, they're all the household names. They're not super leveraged to a reopening of the economy because in many ways their business is never closed. So we're looking at, where is the second derivative? Where is the margin of improvement? And it's really in those more cyclical sectors, more exposed sectors where there's value. And there's opportunity for material gains from here.
Alan, where is the market in terms of expectations on how fast reopening happens and how fast growth comes back? Is Q3 positive growth still the consensus?
I think it is. I think there's a sense that we're not going to actually recover all the losses until at least the end of 2021. So that's a long time coming. We're, in fact, thinking that we're only going to recover all the losses that we've incurred over the last quarter or so and are still incurring by sometime in 2022. So there's a long path ahead in terms of recovery. And the market, I think, anticipates that. So I think the tension you have is really about, firstly, how quickly can you recover, of course, which is the question you asked. But I think it's more, can the central banks support markets and risky assets for a lengthy period of time? That's I think, the big question out there.
And is the equity market telling you yes, they can?
The equity market, I think, is telling you yes, they can for the time being. I think the problems probably arise if you have some sort of second wave and have this period of optimism dashed. I think that is when the equity market will be vulnerable again. But until then, whilst we're still in this phase of opening, I think the equity market is kind of telling you that, look here, the S&P is going to have a hard time to get through 3,000, but it's made, pretty solid low earlier in March, and it's not necessarily going to break down until we see exactly what the path of the virus is.
Hey, Alan, one of the headlines earlier this morning was this German court that seemed to call into question some of the ECB's QE initiatives. To what degree is Europe and their ability to provide stimulus going to be hobbled by these layers of multinational politics?
Yeah, I mean, this one came completely out of surprise. The German Constitutional Court and the European Court of Justice seem to be a bit at loggerheads here. I think there are constraints in terms of monetary financing. It does appear that the ECB is much more constrained just generally than the Federal Reserve in terms of, a variety of different actions, not least its starting point, of course, which was negative rates. So there is a perception there that there's, sort of latent denomination risk, as it were. Italian bonds are clearly trading at yields that are way above what you get at the core of Europe. That's, deeply problematic. So I think people are looking very much at alternatives. The dollar, by default, also wins out very well there. But I think actually the yen is the one that's, I think, picking up a little bit of steam that is being given out effectively by the euro and the negativity related to the euro's redenomination risk.